In a seasonally weak quarter, the revenues and profits saw healthy growth and the margins remained constant at 14%, although there was a surge in advertisement and other expenses. Sandeep Jain, who's the executive director of Monte Carlo, is joining in now. In fact, the stock is up almost about 11.5%. Sandeep, thanks a lot for joining in, and the street definitely likes what they see in terms of your earnings. Profits have gone up 50%. But tell us a little bit about the demand trends, because, a lot of the consumption players have told us that demand has slowed down a bit, especially in some of the semi-urban areas. How are you looking at demand, and what is the kind of growth rates that you're penciling in for the full year?
Very good afternoon. So glad to see that the market is appreciating the performance. And as far as our last year performance was concerned, it was the guidance which we gave, and we met the guidance. And as far as demand is concerned, I think we are cautiously optimistic, as there is some cut in the discretionary spending and there is some effect of inflation also. But we are very confident going forward. The reason is that we are having a good sales even in May also. And also going forward, we see that this growth continues.
So what do you mean when you say this growth? Because you did about 900 crores in FY22, and in FY23 you crossed that with over 20% growth, 1138 odd crores on the top line with 21% margins. What can you foresee in terms of growth for FY24?
For the growth guidance, I think we will be able to give in Q2 this financial year because of we are watching the market very closely, and as you would like to give the very accurate guidance, which is near to accurate guidance. So we are seeing the summer sales which is happening right now, and also we have a trade show which is coming up in August. So we would be able to give the full year guidance in September this year.
So what is the reason for which you're cautiously optimistic now? I mean, is it because of, the consumption trends slowing down across the board? Is it something related with your own business? And would you be looking to sort of diversify into export markets? You've largely been a domestic player, but any, expansion into export markets for you?
See, the reason being for that is that discretionary spending is down. And definitely there is some effect of inflation also, and some uncertainty at the macro level. So otherwise, I think as far as we are concerned, we are very optimistic about our brand. We have still planned to open 50 to 55 stores in this financial year. Last year we opened only 45 stores. So you can see that we are optimistic as far as our growth prospects are concerned. But to give an accurate guidance, we would like to give in Q2 this financial year, so that we are near to the guidance.
All right, we understand that. You said summer sales were good this time around. Could you give us a sense of how they've been? I mean, in the first quarter so far, first month is over. How has summer sales been as compared to same time last year?
See, I would just like to give one more update. See, we used to have around 55 to 60% of the Q3 contribution in the total turnover. But this year, yes, the contribution was just 46%. As compared to 64 we did 2 years back. And another update I would like to give is that, our brand, we have been questioned in the past about the summer sales in South and West. Just 2 years back, we had a total sale of around 37 crore in summers in West and South. This year, we have done almost 100 CR. So that shows the brand is getting accepted in Southern and Western market also. And the summer sales are growing faster than anticipated. So that's the reason we are optimistic going forward also, and we are opening another 50 to 55 stores.
So just trying to understand this better, largely Q3 is heavy for you because you have, in terms of both revenues and profits, because of the winter season, which has been your forte for the last many years. But are you working to reduce the seasonality of your business by getting into perhaps, by diversifying into other seasonal products? Just trying to understand, what the way forward could look like.
I think to put in a right way, that the summer wear is growing faster. Otherwise, the winter wear is also growing, but the summer wear is growing faster. That is why the contribution from the third quarter is going down, but the overall revenue is going up. So the summer wear, as we are expanding into South and West, as I've said earlier also, that we have reached almost 100 CR of turnover as compared to just 37 CR in last 2 years. So when summer is getting acceptance in South and West also, and we are increasing our summer sales, so overall sale is improving. So dependence on the Q3, the winter wear is coming down.
Can you explain to us what exactly is your revenue mix across channels? I mean, you have indicated that you will increase your exclusive brand outlets by about 50, 55 in this year after increasing it by 40, 47 last year as well. Total, as I see it, stands at around 350. Then you have some online sales coming in. Then you have some sales from non-exclusive multi-brand outlets as well. So can you give us a sense of what your channel mix is right now? And is it all profitable?
Yeah. Roughly, it is around 40% comes from the EBO channel, around 27-28% comes from the MBO channel, and then there's a 12 to 13% comes from the home textile channel, around 8 to 9% is the kids wear, and rest comes from the other businesses like corporate sales and all.
And all of them are equal when it comes to margins?
Yeah. So MBO SI's business is more profitable. Then comes EBO, then comes online, and then come LFS, which is a modern retail.
And this mix is likely to remain the same going forward as well? Or are you looking at changing this mix going forward?
Yeah, I think EBO sales will grow faster as we're opening another 50 to 55 stores this financial year. So definitely it will be in favor of EBOs.
Okay, so it will be in favor of EBOs. Got that. You're undertaking some expansion in the home textile segment as well. Can you tell us a little more about that? What does the next 1 to 2 years look like in terms of home textiles, and any kind of export opportunities? Just coming back to that again.
It's on track. We have already acquired the land at GNK. Okay. So I think the building will start constructing the building by next month. And then I think this plant should be operational by June next financial year. So once this plant is operational, it should add roughly around 200 CR in the revenues. And going forward, we have planned to make it to 500 CR in next 3 to 4 years in home textiles.
All right. Thanks a lot for joining in. Next 3 to 4 years, home textile becomes a 500 crore opportunity after 250 that it crosses once this plant is on. The street likes what you say. You've increased your exposure in terms of revenue coming in from the non-core markets, which is southern and western parts. You've increased your exposure coming in from the summer business as well, which earlier wasn't your strength. And as a result of which, we are seeing a big jump in not only the stock price, but the way the company's performance has grown as well, over 20% revenue growth in the last year. But we'll wait for a couple of months before he gives us guidance for FY24. So that's about Monte Carlo. We take a short break.